What's up, YouTube? Welcome back to my channel. My name is Nathaniel, and here we talk about everything finance, business, and personal success. Look, this is going to be a piggyback from the most recent video that we talked about with the virus and how it's affecting our global economy.
That has now reached outbreak proportions and likely pandemic proportions. If you look at, by multiple definitions of what a pandemic is, the fact is this is multiple sustained transmissions of a highly infectious agent in multiple regions of the globe.
And how this ultimately is going to wind up affecting your pockets. So let's jump into it. Let's learn some new terms together, and let's talk about how we can overcome some of these challenges, short term and long term. Now, look, lately we've been hearing a lot about what the government is going to do and how they're going to ensure that they're going to get money out to our pockets. And everything else is kind of blah, 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 stimulus, blah, 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 money in your pocket. But let's go over some of the fine details as to where it could be a little confusing. And if you don't ask the right questions, you're going to be stuck in the past and maybe even stuck with more financial burden than you anticipated. Look, the Federal Reserve is working on a package. It's called a stimulus package. Don't be confused. 2007, 2008, 2009, it was literally the same thing, but it was called a bailout. And in a lot of terms, it was called a corporate bailout. So how does that equate to your pockets today? But stick around to the end, because we're going to go over some of my personal strategic efforts and how I'm going to align myself to pay back very little in taxes, because we all know that this is going to come with the price. Don't be fooled for one moment that just because we're here right now in the present, that in the very near, if not distant future, there are going to be some consequences. And those consequences typically come in the form of increased tax burden. So before we go any further, give me a thumbs up, subscribe to the channel. Don't forget to So before we continue, don't forget to subscribe to my channel. Give me a virtual thumbs up and hit the notification bell in the corner. It tells YouTube the type of videos that you want to see, and it also tells YouTube the type of videos that should be shared with others that may have the same concerns or same questions about finance. So let's talk about the Federal Reserve, since we're hearing a lot about it on television. For one, it's not even federal. It's a name given to them. And if you go to the website, they'll let you know that they're not part of the feds. Two, they're not a reserve. They don't have any cash on hand to just say, hey, look, I want to go to the Federal Reserve and go take out a loan. It's definitely not how it works. The Federal Reserve's job is to help regulate the economy, meaning that when the economy is growing too quickly, it's the Fed's job is to help raise the interest rates. So when you go to a bank and you notice that, hey, listen, well, just a couple of months ago, it was at 3.8 and now it's at a 4.5. What's going on? Well, that's to help regulate the economy, and vice versa. When the economy is growing too slow, it's the Fed's job is to step in and say, listen, let's reduce the interest rates to give more confidence to the people so that both you and I are more prone to go out and take out loans at a very interesting and comprehensible interest rate. So let's take a look at where we stand today. We've got this virus that's running rampant and unfortunately infecting a lot of people, and even worse, a lot of death is occurring across the world. So the Fed is stepping in, the US federal government is stepping in and says, hey, look, we're going to support a lot of these corporations that are taking a huge financial hit right now because everybody has to work at home. Nobody's spending their money the way that they used to. People are kind of hunkering down, right? We talked about this on in my last video. So what do we need to do right now? We're going to create a package, and you've probably heard this over the past 30 to 45 days. They created a package and dumped so much money into the economy. For a moment, the stocks rallied. But then again, just almost instantly, the stock started to decline again because the confidence level of the investors just wasn't there. We knew They knew, I knew, that it just wasn't enough money to help support the American economy. So they went back to the round table, and last night they agreed to dump in $2 trillion into the economy. Lo and behold, the stock market is rallying. It's gained, it's garnered the confidence of the investor, you and myself, to say, hey, listen, okay, this may be enough money to sustain an economy for another 90 days. We're in hopes that once we reach warmer weathers, this may decrease the infectious disease that's being spread around this global world. I was gonna say global economy, but you wanna know something? It's more than just the economy. I mean, it's humanity. So we have to be mindful and know that it's not just about business. It's just not about dollars and cents. It's about human interaction. It's about humanity and what we as a people are gonna do to come together to fight this infectious disease, such as social distancing. The Federal Reserve is going to start pumping out money into our economy to help boost the confidence of both you and I, so that we can start investing again. Now, when you think about investing, it just doesn't necessarily mean investing in equities, in companies, in shares of stocks or ETFs or bonds. It's you literally going out, spending your hard-earned cash and going to 7-Eleven, going back to the grocery store and frivolously spending, buying boxes of cereal that you typically wouldn't buy, going back to JCPenney or Macy's and buying clothes again, getting back out into public, increasing your consumption of gasoline. So the Federal Reserve spends 12 cents to print this paper, cash. They spend no more than 12 cents to spend it. Now, we all know that there's nothing to help support the dollar bill, like there used to be this tie between the dollar and gold. Well, it has no value now other than it just being paper. But we put so much value into 12-cent paper because it could go a long way. Now, we can go buy a t-shirt, we can go to dinner with this, but again, it's not backed. And that's why there is such a fluctuation of the strength of a dollar bill, whether it's deflated or inflated. And we hear about this all the time. It goes up and down like a roller coaster. So just like the stock market in terms of its buying power. So the Federal Reserve is going to go out and print all this money, $2 trillion, and loan the money to the government. The government is then going to issue out what they call now a stimulus package. Let's call it what it is, a bailout, to companies. Issue checks to us. Now, we've all heard that if you're an individual and you make under a certain amount of money for a single or a certain amount of money for a couple, you are going to receive nothing less than $1,200. And if you have a child, it's an additional $500. So $2,400 for two people plus an additional $500 per child. Seems like a pretty good deal, right? Now, they're not taking taxes out of this initially. Trust me, ladies and gentlemen, you will pay for this one way or another. And this video is to highlight some of those ways to help minimize how much they're going to be taken from you through, guess what? This channel is finance, investing, and personal success. And we're going to put all three of those together. We are going to be successful at investing. We are going to, in fact, invest. And we are going to use our financial savviness and work together along with other YouTube outlets that you watch, but learn. We have this time at home through social distancing. Again, like I mentioned in my last video, do something productive. Learn something. I don't care if you start off watching a YouTube video, as long as it then spawns off to where you're now reading and taking that reading one step further. Now you're researching and you're thinking about this, and subconsciously you're thinking on new ways on how to better improve your life. And I don't care what it is, whether it's you learning a new language, coding, speed reading, learning more about finance, opening up a brokerage account, doesn't really matter. Healthy exercise, healthy eating, whatever it is, you're going to improve yourself. So lately, CNN, Fox, CNBC, we're hearing about these legal terms, this legal jargon that a lot of people don't understand. And my credentials go back as far as business. I mean, that's what I went to school for. My MBA supports my enthusiasm for learning more about, finance and the economy and strategic management. So I feel inclined to be able to share this with you to help kind of break down some of the verbiage that's being used so that now you understand how the government plans on using your money, your tax dollar, to help bail them back out and pay for a substantial amount of money that the Federal Reserve has printed. Because again, remember, the government was loaned this money and we must pay it back. So I've got my handy notes here again, and I'm just gonna go over just like I said, just a term that really stuck out to me. They're using terms such as smooth the transition of monetary policy, supporting the flow of credit, and my favorite, open-ended quantitative easing. That's a good one. Open-ended quantitative easing simply means that the Federal Reserve has decided to print an unlimited amount of money.
Another one.
Amount of money to ensure the bailouts are successful with all of these different industries. I'm not going to just narrow it down to corporations, but we're going to go industries. You've got the travel, you've got entertainment, you've got automotive. So when I say travel, I mean like the cruise lines and the airlines. So these are being bailed out. Just a couple of days ago, within this week, I saw the airlines were very, very attractive. But as soon as this corporate bailout came through the stimulus package, stocks just really just shot up. There's still value. As promised, again, I wanted to be able to share with you some of the ideas that I have for myself, for my own personal investing, and how I'm going to ease some of the burden of them taxing this money, whether it's short or long term. I don't know how long it's going to take. I can assume on our next taxes we'll start to see something, but we will start to see throughout the economy that we're just going to be paying a little bit more, and that is again to ensure that they're receiving that money back on all that loan money that came back from that came through the Federal Reserve. So my investments and what I'm looking at personally, we'll just kind of take a look here.
I was going to go over a couple of picks that I'm really interested in the definite foreseeable future. And one of those companies is called IMAX. So how am I going to minimize some of the hurt that's going to be inflicted on taxpayers here in the future? Well, I'm going to trade the market here and make some money off of people's fear in the market, because that's all it is. This is emotional trading right here. Are things going to pick up again? Of course. But are people in fact going to the theaters? Absolutely not. In fact, it's mandated to not go anywhere. To make it worse, they're closed. So they're really not going to be making any money right now. But let's just take a look at this. Not even looking at the financials. We're just going to look at some of these support and resistant bands in the stock, just to give you an idea of what some of these charts actually represent. So right here, we're looking at a price that's roughly around $20, $17 a share. It's one share. But this is what's interesting is right here, is this band right here. These two little bands right here, these are called support bands. This is supporting the price that we see right here. And we see that the average is between 1763 and 1707. So we're very, very comfortable. Investors are very comfortable with paying between $17 and $18 a share. But then here's where the confidence level comes in. It just kicks in right here. People are a little bit more optimistic about the future of movies and optimistic about IMAX in particular. But then Rona hits. America starts to learn more about the devastating effects and how contagious this virus is. And we see that it just goes down. And these right here are resistant bands. This is saying, well, this is the top that I'll pay. But you see, it doesn't hold very long. This is the top that I'll pay right here. This is the top that I'll pay right here. And it just keeps going further and further down. What we don't see our support bands at all. They're just nowhere to be seen. So we know that there's no support. We don't know what investors are willing to pay as it just keeps continuously going down. So between, I don't know, a high of 1763 right there and a low of roughly 1126, that's about a 44% dip. So being optimistic, looking towards the future, I know that there is a potential of gaining 44% on for every share that I own. That's pretty good. So let's take a look at the next one. To me, this one's going to look very, very similar to the other one, and just in terms of the pattern. I mean, we see this Rona right here, right? And we see the confidence level just kind of peaks up a little bit. Do we see our resistant bands? Yeah, we see them. We see a couple. That's pretty similar right there. This is what we're comfortable paying. You know, here and here. Here's what we're comfortable paying. We definitely don't see that here. So let's just kind of dive into what we're looking at here. So between the beginning of the year until the 23rd of this month, we definitely see a huge decline. So when we take the top, the high of around 46, between $46 and $47 a share is probably where we're comfortable. You see that? Pretty comfortable in here, paying between $46 and $48 a share. So there's going to be about a 44% difference. Very, very similar to IMAX, right? Now, again, I am no financial consultant. I am not here to give you advice. I am just definitely telling you what interests me as an investor into companies. So if you do need further advice, if you're a little unsure about how to trade the markets, and remember, we haven't even looked at the financials, so definitely do your due diligence. But seek a CPA or a financial advisor. Call your brokerage and ask them for some advice and see how this can better be explained to you in terms of trading. But if you're comfortable trading and you like what I'm looking at, comment below. If you have any questions about some of the financials after you look at them, put a comment below. Let's dive into it. Let's talk about it a little bit. But again, I just want to go over just a couple of companies, and trust me, there are several more that I'm interested in, but I just want to give you guys a good example of what to look at when you're looking at companies, and look at what the general public is comfortable paying, right? I mean, we definitely seen some huge gains in 2019 through 2020. We knew at some point this was going to happen. We just didn't know that Rona was going to be the cause of it. She came in. She doesn't want to leave, and investors know that. So government's pumping in $2.2 trillion, or is it just $2 trillion? And we'll see what happens from there.
So again, thank you so much for coming to my channel today. And as always, please give me a thumbs up, subscribe to the channel, hit the notification bell so you don't miss videos that I put out in the very near future. And let's talk about some of the ideas that you have for reducing your tax burden. We have until July 15th, so it's been extended by 90 days for you to file your taxes. I am not a financial advisor, but if you're strapped for money and you're going to be owing taxes, I would definitely suggest holding on to that money a little longer and possibly taking advantage of the July 15th tax filing so that you can just keep money in your pocket a little longer, because we don't know what else is going to happen. We don't know if there's going to be an influx. So thanks for sticking around and hanging out with me to the end of this episode. I really hope that you've learned something, that you can share something with others. If you have any comments, put them below. Let me hear about some of those. Let's talk about things you've learned over the course of these past 60 days. Tell me what you're doing in terms of social distancing. I would love to hear about, your methods of ensuring the safety of not just yourself, but others as well. How are you maneuvering through this economy? Are you making any trades? Tell me about some of the investments that you're thinking about or that you've done and why you did it, why you thought those investments were important. Do you personally use any of those brands or take advantage of any of the services? And if so, let me know. I would like to you look at it, analyze it with you, and see if it could be a long-term play for me. But until next time, thank you so much, and we'll talk soon.